Greetings. Welcome to my weekend market recap 9th April 2022. I am traveling and I am using a laptop for this webinar. I hope the sound is coming through okay along with the screenshots. If not, you may let me know using the chat panel. I'll try to resolve any issue that may be in the broadcast. Let me continue. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. This is my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I'll use the Q systems in my analysis. Most of them run on the Metastock platform and some also runs on the TradeStation brokerage platform. That was the last slide. Let's continue with a look at the global markets, starting with the Australian Index All Ordinaries AORD. In the previous market recap 1 week ago, when price was at this point, I mentioned that I would like to look for shorting opportunities with proper trade setup in individual stocks. That was based on the fact that price was already significantly above from swing low and it displayed multiple possible reversal signals. At a point where we had the watermark resistance in weekly and that level had a headwind reversal signal earlier. When you combine the weekly and daily 1 week ago, at this point, you would look for low risk shorting opportunities, not buying at a swing high. And this pattern is pretty effective, and in my trading terminology, effective means profitable. And let's review similar pattern coming in separate individual stocks in global markets, some in USA markets, some in non-USA markets as well, and I tweeted a couple of them recently on my Twitter handle Sagar Nandi, not this one, this one. This is a weekly daily chart of Tesla. Notice the pattern. In the weekly, price came to the trend line resistance and reversed precisely from there. In the daily, price came to trend line resistance, then came down from there after displaying a headwind reversal signal. Close of that headwind reversal day would be the optimal time to short Tesla with stop just above the trend line resistance here. And from there, price fell down, covering more than the risk distance, and profit could be booked. This trade could be taken using the different resistances in weekly, daily, trendline resistances in this case, and the reversal signal, headwind reversal. Let's look at the same or similar pattern in India market. This is Nippon Life, I think an insurance stock in the Indian market. The Reuters symbol, definitive symbol is NIPF.NS. This came to the trendline resistance in daily, displayed the bearish headwind, and that day closed with a bearish shape candle. Close of that headwind day would be the optimal time to short, with stop just above the trendline resistance. From there, price dropped enough to cover the risk distance, and by Friday's close, partial profit could be booked. If you look back, the bullish headwind here and the bullish headwind here, the diamond signals, they could successfully catch the local bottom, local low. And here the bearish headwind could successfully so far catch the local high. This is the way I used to trade Tesla, trade Nippon Life in India, and that is the same way I used for All Ordinaries 1 week ago to decide a bearish bias on All Ordinaries. And therein also lies the distinction I make between whether the market is bullish or bearish and what is my trading directional bias. If I look from this point onward, and that's quite a number of weeks, several months from January onwards, All Ordinaries is in an uptrend. But uptrend doesn't mean I am always going to keep on buying. When it is significantly above recent swing low and I have appropriate reversal signals and some resistance in either daily and or weekly, I am looking for low risk shorting opportunities. In that way, probably Q technique is different from some other techniques where people always look for only buying in a bullish market. What about Friday's close? The weekly shape is indecisive. It has bearish indecision signal. We still have the effect of the bearish headwind bear release in daily. I will like to continue to look for shorting opportunities until price comes to this yellow direction line or maybe this daily trend line support. So my preferred trading direction for all ordinaries is remaining bearish. What about Japan's Topix index? Once again, when price was significantly above swing low, came to swing high, and if the trendline resistances were there when the bear release came, then using Q guidelines, the preferred trading direction would be bearish. And price fell from that local high, giving us significant reward relative to risk taken in the trade, and we would exit the swing short trades, which would be taken, at least that is my preference, in individual stocks, not in the index itself. What about the right edge? Now price has dropped significantly from swing high. We have a bullish indecision on the Friday's candle. The weekly candle shape and color both are bearish. So weekly is telling me to short, but the bearish indecision is telling me, sorry, not bearish, the bullish indecision at the low is telling me not to short right now. So what I would like to see is for Topix to go up little bit, then come down again, giving me a low risk shorting opportunity. That will be a flow trend following shorting opportunity. Is there any other scenario I'd like to pursue? Yes. If price does not recover but moves sideways from here, then once and if that sideways range is broken to the downside, I would like to short. In case of price going up, making a swing high and coming down, my stop will be just above the swing high. And if price now moves sideways and breaks down below the range, my stop will be just above the sideways range. In both cases, I am looking to short only when my risk is narrow, stop loss is narrow, and that is a constant in all the Q trades. What is my preferred trading direction then in topics right now? Indecisive. I don't have any preferred trading direction right now. I would like it to move in a certain way before deciding my trading direction. Right now I have no preferred trading direction. I'll stand aside. China's CSI 300. What is the market direction? That is downward, bearish. Weekly is coming down, daily is coming down. What is my preferred trading direction? None. Because at the right edge it is inside a triangle pattern. On Friday we have a bullish shape candle. Price tried to go below the trend line support but nicely recovered and closed just above the trend line support. It is near the tip of the triangle. If it was not at the tip of the triangle, this Friday's support would be reason enough for me to buy, but it is near tip of the triangle, so I'll wait for a breakout either to the upside or to the downside before taking my next trade. Currently I have no directional bias for trading in the China market. UK market FTSE index, bullish. It had a wild swing up move from below the lower boundary straight up to the upper boundary, and the up move started after displaying bullish indecision, two in a row, and then bull release. Is it bullish at the right edge? Yes, Friday's candle and weekly candle both are bullish. Am I going to buy now? No. It is far above the recent swing low. The weekly is approaching a watermark resistance where a bearish headwind came earlier. Remember, this was the pattern I used in All Ordinaries in Australia earlier to look for shorting opportunities. And UK is getting ready for a similar situation. Friday's candle is very bullish. I like to see Monday or Tuesday's candle coming down. And if that happens, then I will look for low risk shorting opportunities in individual stocks. And lastly, India's Nifty 50. Somewhat similar to the UK market, far above the recent swing low. From the low, the up move started after displaying the bullish indecision and bull release. At the right edge, it came to a trendline resistance. Again, very similar to the pattern in Australia market 1 week ago. Came to the daily trendline resistance and price fell down on this day, next day, and next day. On Friday, price recovered. However, if you can see it clearly, Friday's candle shape is somewhat indecisive. It has both upper and lower tails. what I will like to see, I like to see that price goes up to the trend line resistance in daily and reverse from there. If that happens, I have a very low risk shorting opportunity from both the daily trendline resistance as well as weekly trendline resistance. That is how I anticipate a particular market move and wait for that. And once the low risk opportunity presents itself, without second guessing, I take the trade. That was a look at the global markets. You saw that several of them are not downtrending. They are at a local high but not downtrending. And if we wanted to know how the global market is doing as a whole, we could look at the global index. This is also significantly above the recent swing low. Up move started after displaying successive bullish indecisions and bull release. From the price level below lower boundary, it went straight up to the upper boundary. That's a wild move. Now it has displayed bearish headwind, bearish indecision, bear release. I will like to see price coming down because that will give me low risk shorting opportunities. If price goes up from here, it will not be easy to look for low risk buying opportunities. That is the global index. Individual stocks in strong industries may of course give buy setups. That was a look at the global market. The global index as a whole here, as we can see, is also bullish. What about the USA market? Let's start with QQQ, Nasdaq ETF. If you followed my ideas shared publicly on my website or Twitter page, at the low point I was buying. When price came here, I started to look for shorts. That was very effective, and in my jargon, effective means profitable because QQQ fell from here after displaying the bear release signal. In the Graduates Club live chat, I had shared that on this day, that was a gap down day, I took a short position in QQQ in anticipation that next day price will go below the low of the gap down day. It did cross below the low of the gap down day, and on Friday price fell down more. Friday closed with a bearish shape candle. Both for the day and for the week also, the shape is bearish. The relative performance line is tilting down. So QQQ is certainly not allowing us to buy. The Graduates Club members know that on this day I shorted QQQ, and that was using short call vertical, and I used an expiry of 11th April, that is coming Monday. It has just one more day left to expiry. As of Friday's close, I had 40% of max profit in the trade. Usually I look for 50% of max profit. However, I had only one more day to expiry left in the trade. I didn't want to risk erosion in the profit, so I closed the bearish position that I took using short call vertical in QQQ on Friday. I closed the full position at 40% of max profit. I also shared in Graduates Club live chat that on this day, that was a gap down day in QQQ, it had a gap down day on Facebook also. I'll come back to the other market ETFs. Let's look at some of the trades I shared. And I took a short trade on Facebook on this day. That was a gap down day, and once again I am using the different signals together. Facebook already displayed the bearish headwind one day earlier. I could have shorted it on that day, but I did not. Next day it gapped down. I shorted it on that day. That trade was also taken using short call vertical bearish trade, and I am holding at least partial position as of Friday's close. The daily candle color is continuing to be red bearish, and the weekly candle shape is also bearish. I am holding the short call vertical position with a small percentage profit. QQQ has many mega cap tech stocks that is looking weak, and Facebook is one of the mega caps. The other mega caps are also not doing well. Let's look at the other market ETFs now. Mega caps are not doing well. QQQ is heavily influenced by that. What about large cap, which is represented by S&P 500 stocks? SPY is the ETF. Once again, you see the bearish headwind could, surprisingly, isn't it, catch the very top of the recent up move. After this bearish headwind, price could not go up. Now it is not as bearish as QQQ. We have a bullish indecision on Wednesday and another one on Friday. For last 3 days, price is moving sideways. The weekly candle also is not as bearish looking in shape as that of QQQ. So QQQ is certainly not allowing us to buy. SPY is also not allowing us to buy, but SPY here is not allowing us to short as well. What will I like to see? One possibility is that let price go up, hit the trend line resistance and come down from there. That will give a very low risk shorting opportunity. Or I think this is the same pattern I saw in another index just now. The other alternative is let price move sideways for a while and break down to the downside. I'll be happy to take short trade in SPY at that time. But will I really short SPY? May not be. I will look for the weakest of the market ETFs for shorting, and currently QQQ is looking weaker than SPY. Because these are market ETFs, if I short, I would like to short the weakest one. If SPY drops, QQQ may drop more, and that will be my preferred shorting candidate. What about Dow Jones Industrials ETF DIA? This is more strong than SPY also. So SPY is stronger than QQQ and DIA is stronger than SPY. Here price is gradually going up. It is not bullish enough to take a long trade, but from Wednesday to Thursday to Friday, price went up. That's why I can see the activity colors on Thursday, Friday, they are green, meaning Thursday and Friday price went up. Am I going to buy now? No. Why? Because weekly is very indecisive in shape. Friday's candle has an upper tail and also price is too close to a trend line resistance. I am not going to buy any instrument that is so close to a trend line resistance. And because it is stronger than both SPY, both QQQ, if I am bearish on market, I have other instruments to short than DIA. And lastly, small cap ETF IWM displayed the bearish headwind. Once again, that could very successfully catch the recent high. Last week in the market recap, we were right on this candle. And at that time, IWM was looking stronger than the other market ETFs. And I mentioned that I would look for small cap stocks to buy at that time. I remember only one long idea I shared at that time. That was a biotech stock, BioNTech. And I shared that idea on my website. I think that trade that I initiated around that time had already exited. That was a short naked put bullish trade. Now, though Q, though not QQQ, though IWM was looking stronger as of the previous market close, afterwards you can see the relative performance sharply fell down, and of course price also fell down. So it was not only falling down, it fell more than the overall market. So now it is the weakest of the market ETFs. But I always make a distinction between bullish, bearish, strong, weak, and my market bias. Is it the time to short IWM? No. Why? Because we have a bullish indecision on Thursday. Price could go back above the trendline support, and Friday's candle could not break decisively below the trendline support. So I'm not going to short it now. Am I going to buy? Certainly no, because the weekly color shape both are bearish and Friday's candle shape and color both are bearish. What is my trading scenario I will wait for? One scenario I'll wait for is for price to come to the weekly trendline support and bounce up from there. That will be when price will come to this watermark support in daily and bounce up from here, and that is the level where a bullish headwind could catch the very bottom. So if price comes to this watermark support, which is same as the which is same as the weekly trendline support, and bounce up from there, that will give a very low risk buying opportunity. I may wait for that. What if price breaks below this trend line support? Then IWM itself will not give a low risk shorting opportunity because the recent high is significantly above the breakout point. However, if this breakdown happens, individual stocks may give lucrative low risk shorting opportunities. Right now, I am not going to buy or sell IWM. So looking at the market ETFs, we can conclude something. One thing is IWM small cap. So small cap, I'm not going to buy right now. That's based on the market ETF study. I will see if that is further corroborated from market internal health studies. And I saw QQQ is also weak. That is mega caps are weak. So I'm not going to buy mega caps. I'm not going to buy technology stocks. That is a conclusion from the market external view. Let's now look at the market internal health using market view total breadth, market breadth total view. Market breadth total view for USA market, that is created from analysis of the two composites and four major indices. There is one signal on the last four candles in this daily chart that is not letting me buy overall in the market. That is the very unique Hindenburg signal. Danger alert. Tuesday itself we had the first Hindenburg, that was an alert to get ready for bearishness, and very next day, Wednesday, we had the confirmed Hindenburg. The color changed to bearish magenta. And on Thursday and Friday, the Hindenburg came again. Remember when last time the Hindenburgs came here? And from there, price came down significantly. And now the same thing has happened. A series of Hindenburg has come together after price recovered somewhat. These Hindenburgs are one reason I am not going to be bullish in the market right now. Another reason will be the internal health study percentage of stocks above 50 MA. The yellow line, it is now coming down with lower high, lower low. That is also showing internal weakness. Second reason I am not going to buy. If we look at the advanced decline in the daily interval, the advancing stocks are coming down, declining stocks are increasing. The peaks are becoming shallower, the troughs are becoming deeper. That is the same pattern we see on up down volume. So in terms of market breadth from many angles, percentage of stocks above 50 DMA, advanced decline, up down volume, all are telling me to be cautious on the bullish side. I am not going to buy, at least not buy non-defensive stocks. I may buy some defensive stocks if they are in strong industries, and if I have a low risk buy setup. Non-defensive sectors, I will be cautious. And of course, Hindenburg is also a good reason not to be aggressively buying at this time. What about growth versus value? That is coming down now clearly. Growth is not in favor. If at all I am buying, I look to buy value stocks. And small cap versus large cap. From market ETF studies, I commented that I am not going to buy small cap, and here also from market internal health study I see small cap versus large cap coming down. That is also telling me to avoid small caps. Is Nasdaq stronger or NYSE stronger? That we can know from market breadth of Nasdaq and NYSE from the yellow line, percentage of stocks above 50 MA. For both Nasdaq and NYSE, the yellow line, percentage of stocks above 50 MA, they are coming down with lower high, lower low. That is bearish. Nasdaq, it is around 38% level, and NYSE, it is around 45-46% level. So NYSE from this perspective is continuing to be stronger than Nasdaq. That's another reason to avoid technology stocks. And here we see the source of the Hindenburg signals that came in market the total view. They came from NYSE. These danger signals, they did not come from Nasdaq. And Hindenburg was originally designed for NYSE. That is the appropriate source, though Q can also calculate Hindenburg on Nasdaq, but Hindenburg did not trigger on Nasdaq in last couple of days. It did so on NYSE. Based on the market ETFs and market internal health studies, my conclusion is not to be bullish right now. That conclusion is more from the market internal health studies. And if at all I am going to buy, I am not going to buy small caps, and I am not going to buy technology stocks. Let's see what conclusion we can arrive at from few other market analysis. First, looking at sector industry stock advanced decline. This is a very useful study. advanced decline of sectors, industries and stocks starting from 1 month period to 1 day period. And during market hours, we can see here the real time period. During market hours, this will change to real time. Let's focus on the M1 to 1 day period. 1 month period is bullish for sectors, industry, stocks. And you see how nicely, gradually, the bullishness changed to bearishness. So longer term interval is bullish, shorter term interval is bearish. Friday also closed bearishly. So I am not going to look for buying opportunities. If Friday was a bullish day, then I could look for turnaround buying candidates, but Friday was mixed day at best, you can say. If we look at the more granular stock level, it was bearish. Medium granularity industry level also bearish, more bearish than bullish, and only sector level is more bullish than bearish, but sector is least granular. So overall we have to conclude that in terms of sector, industry, stock, advanced decline breadth, Friday was bearish. So I would not look to buy now. If Monday becomes bullish, then I may look for turnaround buying candidates, but that we'll see what happens on Monday. This graph clearly shows how the longer term was bullish. That might be the time to buy, but not now. Now it is gradually weakening. And let's look at the sector performance. Sector performance, two charts. One is comparing 1 day versus 2 day, and another one 5 day, 10 day, and month 1 performance, 1 month performance. 1 day, that is Friday, 6 sectors were up, 5 were down. Over 2 periods, 5 were up, 6 were down. So 1 and 2 day periods are overall, you may say, neutral periods. Total we have 11 sectors, so 6 up, 5 down, or 5 up, 6 down, that is neutral territory. Over 5 day period it is more bearish, 8 sectors down, 3 up. Over 10 day also bearish, 4 up, 7 down. Month 1 is bullish, all sectors are up. So 1 month very bullish, 5 day, 10 day bearish, 1 day, 2 day is neutral. So from bullishness we went to very bearishness and then neutral. Now if price goes up, the neutral picture will change to bullish picture and I may look to buy. It is the same conclusion I arrived at when looking at the advanced decline graphs. If Monday that graph changes to bullish picture, then I may look to buy. Now in this picture there are some sectors that are up for all the periods, 1 day, 2 day, 5 day, 10 day, month 1. Let's see which ones they are. Energy up for all the 5 periods. Consumer staples up for all the 5 periods. That's it. Only these two sectors, energy and consumer staples, are up for all the 5 periods, that is 1 day, 2 day, 5 day, 10 day, 1 month. Out of these two sectors, energy is up because of the Ukraine war going on. That crisis has lifted oil price and energy sector stocks also went up. The only other sector that is bullish for all these 5 periods is consumer staples, which is a very defensive sector. And remember what I mentioned, if at all I am going to buy, I am bearish on the market because of the market internal health studies. If I am at all going to buy, I may look for defensive sectors and consumer staples could be one of them. Now consumer staples is of course already up for all the 5 periods. I will have to find a stock that is not already at overextended level. Now, can we find energy stocks that are still viable? I look at that, and interestingly, there may be some attractive breakout buying opportunities at price extreme high. If you are able to buy at high price levels when the stock is breaking out, then there are some buying candidates even now in energy sector. I look at that, but before that, let's see whether the market is bullish or bearish from bucket analysis. That is how the S&P 1500 stocks are distributed across their respective Bollinger Bands. This bucket graph was earlier bullish. Most of the bars were on the right side with green color. Now we see most of the bigger bars are on the left side with red color. So now the bucket picture has changed to bearish picture. 1 week ago, last week I think it was bullish. Now we can see 60% of stocks are below mid Bollinger Band, that is also bearish. And that is why since last market recap, I think all the trade ideas that I shared either on my website or on Twitter or in the Graduates Club live chat, I think all of them were on the bearish side. You may check that out. All these are available to the public. Graduates Club is available to all the people who attended the live sessions of master classes. So from Q edge, sector industry stock advanced decline breadth, from sector performance charts and from bucket analysis, my view is continuing to be bearish. Lastly, let's look at technical breadth. If technical breadth tells the same story, technical breadth from Q Finder. Q Finder balance between bears and bulls using technical signals. First look at the weekly picture, that is bearish. All signals bearish, trend signals bearish, trend continuation bearish, trend reversal bearish. Everything is bearish. What about Friday's picture? It is not so bearish. In fact, all signals bullish, strength signals bullish, trend continuation bullish, trend reversal slightly bearish, you may say it is neutral. Also reversals are much less in absolute number than gap ups. So overall we have to say Friday's technical breadth was bullish. That means you could look for buy setups. And when I tweeted about this week's market recap, I mentioned that I will show that though there may be some buying candidates, they are coming from sectors that are already extended. And here we can see from technical breadth that though we have overall bullish picture on Friday, they are coming from stocks, majority of them, 51% of the bullish signals are coming from stocks that are already at price extreme high, which is an overbought condition. And I will show that some of them, majority of them in fact, are coming from energy sector. Energy sector is extended because it is up for a while. Let's look at sector rotation graph using Q edge. That shows the sectors rotating in and out of favor from 12-month to 1-month period, and then more frequently in recent days for 10-day, 5-day, 2-day, 1-day during market hours real time. Energy is the strongest sector on Friday. It is the strongest over 2 days, and you can see it was strongest from 12-month to 2-month period. It was strong for a long time and it is again the strongest. Usually you may not find low risk buying opportunities from such a sector which is strong for a very long time. However, in energy sector there are some buying opportunities. Why? Because of this somewhat deep in the middle. From 11 score it went down to 7. It is starting to go up again, becoming the strongest on Friday. And interestingly, because of this deep in the middle, there are some low risk buying opportunities in energy once more. What is my next preferred sector to buy? That is consumer discretionary. That was the weakest sector for a long time. Now it is the second strongest sector. That is a turnaround sector, and there will be many lucrative buying opportunities in this sector if it continues to recover. Now let's see some of these possible buying opportunities in energy sector. Let's start with Q Finder. Go to the bullish signals that came on Friday. Look for not only signals but actual trade setups, and we have 117 stocks giving one kind or another proper Q trade setup. Many of them are trend following flow setups, 69, and many of them, 44, are breakouts. From which price level? We can see that here. The green color in this extreme column shows they are from price extreme high or low or middle. Let's filter for the bullish setups that came from price extreme high. I click the green paint bar. Now I am left with 53 stocks. Let's carry out a fundamental scorecard analysis of these 53 stocks. What are these stocks? These are giving some kind of Q buy setup on Friday, and they are all from price extreme high. They are not bottom catching. They are not even trying to buy in the middle. They are trying to buy a stock which is already at a high price level. What I am going to show you is that from which sectors these stocks are coming from, and are majority of them coming from energy or not. And most likely the answer will be yes, because energy sector was strong for a long time. It has calculated the scorecard. Let's look at the stocks and look at their industries and sectors from QH. I'm using the integration between different Q systems, and you can see these are the industries that those stocks belong to. What are those stocks again? Those stocks are the stocks that are giving some kind of Q buy setup from price extreme high. If I look at the sector column, there are many of the industries from energy sector. And now remember how many stocks were there in my list? 53. That gave some kind of buy setup from price extreme high, 53. And let's see how many of them are from energy sector. 30. I am reading the numbers from here. So what did I show just now? I showed that there are many stocks that are giving buy setups at price extreme high, which I knew already from the pie chart from QFinder, and now I know that majority of those, more than 50% of those, are coming from energy sector. Normally those sectors, energy in this case, will not give us low risk buying opportunities, but now we saw that energy did deep in the middle for a few days. That's why there are some buying opportunities. One may be in EOG. I looked at some of these stocks earlier, and one I found Halliburton, also Schlumberger. Let's look at some of those stocks. I have listed already in QH. Elite. Let's look at Halliburton, HAL. It was inside a triangle pattern, very beautifully broke above the trend line resistance on Friday with a very bullish close right at the high of the day. The weekly is also very bullish. Looking to the left, there was no bearish headwind signal like I saw in all ordinaries in Australia or few other symbols that I analyzed earlier. Halliburton HAL is looking bullish in both weekly daily. Now its industry was bullish. Let's look at its industry and fundamentals once again using one page scorecard. Halliburton. Let's see this stock Halliburton giving a technical trade setup breakout candidate. Is the stock fundamentally strong? Yes, the answer is yes. It is a high growth stock. High growth stock and accelerating earnings growth stock. No, sorry, not accelerating. From 154% it came down, but it is still very high percentage of 100% earnings growth quarter over quarter, year over year quarterly earnings growth. That is bullish, and funds are accumulating. A massive 94% of PR stocks in oil and gas equipment and services industry went up on Friday. The stock itself went up by 5.8%. Those are all looking bullish. So in itself, we know from here the industry was very strong on Friday. And if I once again look up the industry rotation table, that is also very bullish. As we saw for the energy sector as a whole, this industry was also strong for a while. Normally, we would not find a low risk buying opportunity, but in this case, we can do that because of the dip in the middle for some period. Now it is again one of the top 20% industries. So we found a possible buying candidate in energy sector, that is Halliburton, HAL. And there is a peer stock, well-known peer stock, Schlumberger, SLB. Now, why I listed SLB, you can look at them side by side. Which one will you buy? This is SLB, this is Halliburton. The Q charts I'm using, they are unambiguous. Instantly looking at the chart, you can know which one you will buy, and my choice will be Halliburton, this stock, not Schlumberger, which is this stock. That is because it is having many candles with upper tail in both daily, and let me change the left hand side to weekly. The weekly has an upper tail, and though this trendline support held, it could not break out above previous week's high. Okay, this is SLB. How was Halliburton? Halliburton, both weekly and now I corrected. I think that left hand side is weekly. Both weekly and daily are very bullish for Halliburton, not as bullish for Schlumberger. So if I had to buy one in 60 stocks between them, I will choose Halliburton. Now those are oil and gas equipment and services industry stocks. There are other exploration and integrated energy sector stocks also. One is EOG. Now see once again the difference between EOG here, EOG Resources, ticker symbol EOG, and later on I will show British Petroleum. The weekly here is bullish. However, the previous week's candle had a bearish headwind, that is giving me some reason to be extra cautious in buying EOG. So I will not prefer EOG exploration stock, energy exploration. On the other hand, look at British Petroleum. it is not so high in the price level. It's actually at price extreme middle, created a swing high, created a higher low, and then beautifully broke out on Friday, broke above the trend line resistance, and the weekly shape and color both are bullish. This is giving a low risk buying opportunity. How is British Petroleum's fundamentals? Let's check that out. Great fundamentals. This is a stock that is both undervalued and with very high earnings growth, and funds are accumulating. Excellent earnings quality, analysts are bullish. Also pays a dividend yield of 4.3%, steadily going up. British Petroleum is looking very strong fundamentally. 80% of peer stocks went up on Friday in integrated oil and gas, and if you want to look at the industry rotation table, energy sector is strong again, so I expect this also to be strong. This industry, integrated oil and gas, this is also strong. So we have many bullish candidates in energy sector. The key question is how many of them are looking 360-degree candidates. One I found, Halliburton breakout setup, and British Petroleum also breakout setup, but from different price levels. Now Q systems can also be used to find trades that are not always breakout, and in fact some of them are opposite to breakout, that is hitting trendline support after exhaustion. And I found this stock COOP, Mr. Cooper, Mr. Cooper Group. It's a financial sector stock, COOP. It had a very sharp drop. And where did it stop? In the weekly, it stopped right at the trend line support. In the daily, where did it stop? On Friday, right at the trend line support, and closed above Friday's high. Also displayed a bullish indecision in daily, hit low jump and almost low thrust. Jump is in bright red color, thrust, the upper band here, is dark red. So jump thrust is at so extreme low level that a recovery is likely. Stopped right at the trend line support. Aren't these beautiful supports? And if you applied the checklist conditions, it in fact met all the checklist conditions for bounce long setup. So COOP has given a bounce long setup on Friday. How can I know that? I can know that from Finder. If I put all the stocks here, you can see here Halliburton gave a breakout setup, Schlumberger bullish flow, BP and EOG gave breakout, and COOP gave a bounce setup. Now COOP has extreme high volatility, and this is what I mentioned in the tweet. It has a bounce setup with extreme high volatility that is calculated based on option pricing. So in this case, if options are liquid enough, meaning if the bid-ask spread is narrow enough, instead of buying the stock, I'd like to use some kind of option selling strategy, which will be short put vertical, or if I am okay with the fundamentals, I'm very convinced about the fundamentals based on Q scorecard, I may use naked short put. How is the fundamentals of COOP? Let's check that out. GOOP is undervalued stock, negative earnings growth, but that is fine. We are allowed to buy based on either valuation or growth. If both are strong, that is great, but we are allowed to buy just based on valuation also. So we can buy this stock. Let's see how is the industry. It is not energy sector, it's financial sector. The industry is still very weak, though it has improved from earlier period score, and that improvement is shown by the acceleration. We saw the stock itself dropped precipitously and stopped right as trendline support. If that is the pattern of its peer stocks, we expect the industry to be weak, and now I am looking for a bounce setup that is in sync with an industry that is starting to accelerate after being behind other industries for a very long time. So I am okay to buy a stock in this industry based on acceleration, and it is undervalued stock, so fundamentals allows me to buy. I have a proper bounce setup. Now when I started the market recap, I looked at the global markets. Global markets was looking more bullish than the USA market. In USA, technology stocks QQQ was weaker than the overall market. Small caps were also weak, and because of the Hindenburg and other internal health signals, my overall market view is not so bullish. However, when we looked at the sectors and these stocks, we find some buy setups. Several of them are actually in energy sector and Halliburton, and in my view British Petroleum. They are at low risk buy points, and you may also look for non energy sector stocks that are a low risk buying opportunity like COP. Like this, in whatever be the market condition, you are able to find buying opportunities. Are there shorting opportunities? Probably yes. You may carry out the same analysis that I carried out just now using top down or bottom up approach to find those opportunities. I have shared some of the shorting ideas in recent days on my forum. You may look at them as well. We are beyond 1 hour point. I will not take more time now. Thank you for joining. I look forward to seeing you again in my next public webinar, which will be coming weekend. Have a great weekend. Keep safe. And as I always say, as these live examples show, there is no reason not to do that. Trade profitably. Thank you.